We are evolving our business and strategy to re-accelerate revenue growth, including innovating on our products, investing heavily in our direct response advertising business, and cultivating new sources of revenue to help diversify our top-line growth. Snap shares closed up 5% on July 21st, but tumble. The stock is down 64.9% year-to-date. Following the earnings release, CFRA Research said it maintained a hold opinion on the stock and reduced the 12-month price target on the shares to $15 from $18. Angelo Zeno, senior equity analyst at CFRA Research, wrote in a note sent to GA Banking Rates that we are growing more concerned about business prospects given macro issues and rising competitive pressures, which is hurting advertiser budgets and creating lower bids per action. While the growth The company also said that it won't provide financial guidance for the third quarter, as forward-looking visibility remains incredibly challenging, and it is unclear how the headwinds we observed in Q2 will evolve as we move through Q3, according to the shareholders' letter. Scott Kessler, global sector lead for technology, media and telecommunications at Third Bridge, said that not providing guidance was also of significance, as it makes sense for Snap to be overly conservative, especially given investor sentiment around the company. Snap's second quarter results were. This indicates not only challenges in terms of demand, but also in forecasting demand. Revenues rose only 13%. In the first quarter they surged 38%, Kessler said in a note sent to GA Banking Rates. Times are tough for Snap and it remains to be seen if competitors and peers are seeing similar things. Experts we've spoken with have told us that Snap's focus and reliance on larger brand advertisers have made it more vulnerable to related budget cutbacks. Snap also said that it intends to substantially slow its rate of hiring, as well as the rate of operating expense growth, and reprioritize its Live Richer podcast, First-Time Home Buying During Inflation, Is It Worth It? Discover which stocks are the best to invest in during inflation. The missed earnings drove Wedbush Securities analyst Dan Ives to deem the quarter another train wreck, which highlights a digital ad slowdown, Apple iOS privacy headwinds and TikTok competition further heating up. According to a note sent to GA Banking Rates, in a shaky macro there will be many casts,